Good afternoon to all our viewers. You're watching Countdown right here on Bloomberg Quint Live. It's been a disappointing afternoon to a disappointing start of the trading sessions. The Nifty as well as the Sensex both down closer to 1% apiece. But before we dive into the markets and tell you what's been moving, let's quickly take a look at what's been happening in the headlines. The Nifty and the Sensex continue to trade with sharp cuts, with banks leading the fall. Money markets are unimpressed with the government's 5-point plan to shore up the Indian currency. The rupee weakens almost 1% in trade. IL&FS will have to wait for at least a month before it can go ahead with its fundraising plans as the board awaits shareholder approval to raise the ceiling on debt and equity capital. And IRCON IPO is now open for subscription, making it the second primary offering from the Indian Railways stable. The IPO has been subscribed 0.13 times until 1:45 this afternoon. But let's quickly look at what's happening in the markets and particularly the larger space. Neeraj, it's a disappointing afternoon.
Yeah, it's a bit of a reset button, isn't it, Devina? The currency a bit of a reset back to 72.50. The markets a bit of a reset. The gains over the last 2 days, more so for the beaten down pockets, also losing some ground. Though I must say, OMCs have done rather well. But the market's down about 1%, Nifty Bank down about 1%. The mid-caps and the small-caps should also come up on the screen. The mid-cap index started off on a weak footing. The BSE mid-cap index was down about 1%. It's not done that badly, and the small-cap index, in fact, marginally in the green. But financials on the downside, OMCs on the upside, and then sugar at the broader end of the spectrum. I think that's how I would categorize. But let me talk about the large caps, David. I'll bring you up to speed with what's happening in the mid-cap end of the market as well. But bring up the heat map, and you will see financials out here. Though HDFC Infra right out there too, but HDFC, Bajaj Finance, Bajaj Finserv, HDFC Bank, Indiabulls Housing Finance. So financials are dotting the landscape when it comes to the losers on the Nifty today. And on the flip side, you have some presence of IT, some presence of pharma, but OMC is quite up there. So BP, HP, IOC, all three of them doing okay. And Tech Mahindra, as well as a couple of other small Tech Mahindra and a couple of other IT names have been, Wipro and HCL Tech predominantly have been doing well. But frankly, it's just the bounce back in OMCs continuing and the weakness in banks and NBFCs, which is the center point of the Nifty action today. But the broader markets, they've been a bunch of stocks flying around.
Well, and you wouldn't be surprised, Neeraj, because it's the sugar pack that's garnering a lot of interest, and the volume actually out there has seen a significant spurt up. So I'm just naming three, but if you pull up the mid cap and the small cap index for sugar, you'll see that all of them are locked up on upper circuit, most of them. Besides Barlampur Chini, obviously, because it is in the F&O ban period, so Adhampur Sugar, Shakti Sugar, Uga Sugar, so all of them gains of about 20%. In terms of stocks which are in focus, quality, its QIP opens today. They're looking to raise about 80 odd crores. But remember, just last week you had Brickwork rating downgrade its long-term and short-term debt, so you've got the stock down about 5%. IL&FS Engineering is up 19%. In fact, an IL&FS Transport is also up about 20 odd percent. There are talks of how LIC is probably going to give it a shot in the arm in terms of a bailout package, but let's wait and watch for that one. Aside from that, volume buzzers, like I mentioned, IL&FS Transport is there, so you've got good volumes coming in that one. 29 lakh shares been traded. Oracle Financial Solutions and Avanti Feeds, both of them up in trade with 10 and 11 lakh shares traded respectively. Among some of the losers, we had Bombay Rayon, Cummins India and Bharat Forge, which have seen a slight amount of dip that have come in closer to about 4.5% to about 2.5% apiece for these stocks. But obviously, we're going to keep a keen eye out for what's happening in the futures option space and what's been gathering more shots in today's session. Darshan joins in for that. Darshan, good afternoon.
Good afternoon, Devina. And as we spoke in the morning, we said that if the market stays below the 11,500 mark, there will be long unwinding that will come in. First, let's take a look at far as what's happening as far as the Nifty is concerned. But today, after the unwinding, there are fresh short positions that are taken. Open interest build-up of 3% on the Nifty. Pull up the Bank Nifty and you can come to know what exactly is happening. The Bank Nifty is seeing fresh shorts on high open interest build-up of 17%. Now, as far as the other trends are concerned, let's take a look at the open interest build-up, where total open interest is. The VIX is up almost 3.5%. That's where traction is. As far as the open interest build-up is concerned, yet again, call writers are active from 11,500 right to up to higher levels, and put writers are active from 11,300 right up to 11,500. So 11,500 is now a big support. If it continues to remain there, there will be more unwinding positions that will be seen on the Nifty. Let's take a look at what's happening today. No doubt, since the market is down 100 points, call writers have taken it up their position. It's the 11,400, 11,500, 11,600. At all these level, call writers are active in trade. Not too much of open interest shedding happening, but nevertheless at 11,500 and 600, put writers have shed positions in open interest. A few stocks that I want to highlight, let's pull them up. First of all, Oracle Finance, two big block deals that happened today. Open interest build up of 25% on the long side, trading at record highs. PVR post the CLSA upgrade, open interest build up of 17% on the long side, above the 1400 level. DV's 13% open interest build up on the long side, trading at record highs because of the China API problem. DV's definitely benefits. Few other counters, Berger Paints is seeing fresh shorts, open interest build up of 9% on the counter, and you have Balrampur Chini, which is seeing short covering coming in today. Open interest is down 20%, is in the F&O ban, so positions can't be taken. It's up 11%. And Engineers India, surprisingly a big move coming in. Open interest build up of 9%, and the counter's up almost 5% in trade.
We'll watch out for all of these, Darshan. Thanks for putting them into perspective. So that's essentially what's happening in the F&O space. But is the focus global? The European markets have started off okay. The Asian markets, of course, were a tick of red across the screen, really. No changes, and we also have that. But it's Monday, and we start off the conversation, or start off the show, with a big global voice. And joining us today is Neil Dwane of Allianz Global Investors. He joins us from our London studios. Neil, good having you. Thank you so much for speaking to us at Bloomberg India. I was reading
it's a
through
pleasure to be here.
Some of the pieces that you've published in the recent past, Neil, and you and your team seem to believe that the rearing up of inflation, which you by and large the market seem to have missed in the last few years or decades maybe, could be one key risk that the markets are facing. I believe everybody's talking about this rise in rates and what that could do to global market balance. But the new elephant in the room seems to be the trade war. What do you think is the bigger risk for the markets over the course of the next 12 months?
Well, I think in the short term, clearly it's about President Trump and trade, and importantly, the response from the Chinese in particular. But I think for the markets, as we look into the next 12 months on your time horizon, there's clearly an over-positioning in emerging markets, and we're seeing, as your excellent lead-in has suggested, that maybe we're seeing a strengthening dollar, a fear of US rising rates is leading to people to rebalance their portfolios in the short term away from emerging markets. And even for the next 12 months on your horizon, for audience in India, clearly the political risks around the next election cycle in India will gather more and more concern and more momentum as we head into 2019.
Just to come back to my colleague's earlier question. Good afternoon to you, Neil. You in your report have written about inflation being temporarily curtailed, but factors like oil prices, currency volatility, the trade wars will force up inflation unexpectedly. How much of damage do you see from that, and what is the additional risk that you're factoring in?
Well, I think that the reason we fear inflation is because the world has too much debt. Many of the politicians around the world are simply borrowing money at very low interest rates to stimulate their economy and be popular and win elections, a theme that we may see unfold in India in the next 6 months or so. And therefore, what we have to understand is central banks are no longer programmed to kill inflation. In fact, the only way we're going to pay back the debt we've borrowed is through deflated currencies. And therefore, when we see inflation, the central banks are going to celebrate the arrival of inflation rather than move aggressively against it. And so I think when we think about the warning signals, we already have a very solid oil price at about $80 a barrel. We are now seeing, because of the global weather changes, that potentially there will now be some food inflation that we will have to deal with. But we think more importantly, in the traded goods segment of the world, which has been dominated by the arrival of China and Asia into the manufacturing cycle, we think we're now going to see pricing pressure as China starts to run its state-owned enterprises for profit rather than for employment. All this confluence means to us that the risk to inflation is more likely on the upside, and that is before the tight labour market in the US or potentially the UK and elsewhere starts to see the final proof of inflation, which of course is wage inflation. So we think it's all building to a point where where the world is going to see more inflation rather than more disinflation.
In that case, how do you think investors will probably prepare to fight against the inflation's detrimental effects? And what kind of a play from an investor's point of view do you see, keeping in mind this inflation?
Well, I think that the answer really will come from the US. It's very late cycle. It's had a sugar high boost by the fiscal stimulus from President Trump. And therefore, we think there's a very strong chance that the Fed is already behind the curve. They will have to move more aggressively and sound more hawkish than they have been so far. That, of course, will lift the dollar. It may lift global funding rates at a time when the quantitative tightening from the Federal Reserve will lessen the amount of dollars that we see flowing out into the global economy, particularly into emerging markets. And again, as we're seeing in Argentina, as we're seeing in Turkey and in Indonesia, and we're seeing it in India, countries with big current account deficits without a political system determined to rein in government fiscal spending is clearly one where international investors are shooting first, despite the good fundamentals that we're seeing even in India today economically.
So, Neil, if I look at India, the fisc deficit is not an issue. The growth numbers are not looking like an issue. I agree the twin deficit, and more importantly, the CAD or the trade deficit is an issue. That would probably be the case for the other EMs as well. Do you believe that a strengthening of the dollar that you referred to could result in further large depreciations in the emerging market currencies, including the INR? Because the last 3 months have definitely been about the dollar strength vis-a-vis the emerging market countries. Do you think that will continue into the next 12 months?
We think it's a central case that many clients now need to consider. I think after 2016 and 2017, when we had a weaker dollar, it was very easy to take risk globally by buying into emerging markets, not only the equity markets, but the debt markets. I think as the political cycle now changes and becomes less positive for emerging markets, you look at the difficulties politically in Brazil and South Africa, you look at the clear difficulties today in Turkey. We now see the electoral uncertainty beginning to emerge in India, with your own national cycle about to re-emerge towards the end of next year. So I think in the context of where we have been for the last 10 years, the dynamics of global liquidity being funded by ever-present US dollars is something that we now have to recalibrate, because the Fed, we think, will accelerate the quantitative tightening, which simply means that many emerging markets are going to have to fight globally to access the dollars to refinance their existing dollar debts, but also to borrow more to sustain the level of activity and investment in their economies. And because of the political cycle, we think that makes it harder for governments to fill the gap in the short term, because the austerity is being imposed by the markets rather than by the citizens themselves.
Neil, how does India stack up as an investment destination? It's clubbed with the EM pack, but it's gradually become large enough to be a country-specific allocation as well, if not now, a couple of years down the line. But the twin deficits are an issue. What would you be doing with regards to India?
Well, actually, for the last 6 months or so, we have been watching. We had, as many people had, enjoyed the strong run that we'd seen from the equity market in the last 3 or 4 years. We think the policies from the government have been steps in the right direction. But I think it's now clear that the politics is going to get in the way, we think, of much more progress. So, to be honest, we're waiting on the sidelines. I think one structural thing that the government should be considering doing is making it easier for international investors to own Indian stocks. The difficulties around registration so that you can buy into India directly is definitely hampering the competitiveness of India. And with China on the other side, as an example in the region, opening up its through the Connect systems and through its access to the bond markets, China is trying to attract global capital in at the same time that India is making it much harder for many investors to want to get involved. In the longer term, strategically, we like India. We think the mobilization of what will be the world's largest population is a key strategic trend for the longer term, but obviously the politics in the short term may cloud what has been a strong performance so far. So we're on the sidelines on India, waiting to see on a relative basis how India does, both politically and economically, relative to other areas that have been hit harder by the Trump sanctions. You know, the rest of Asia's down 10 to 20%, India's up 8. We think that relative outperformance is probably justified, but it's enough for the moment.
All right, indicating that probably there may not be cause for a further upside from the already existing upside and the divergence against the emerging markets. The other point, Anil, is central banks, be it the Fed, be it the RBI here in India, they have been on a path of increasing interest rates. And what does that do for liquidity? And do you see that coming under a little bit of pressure?
Yes, I mean, I believe through this year what we will have seen is the first effective temper tantrum since 2013. The markets are beginning to see the dollars being sucked out of the markets, and we're now seeing competition around the world for those US dollars. And as the Fed raises rates potentially more aggressively than the market wishes to price in, then I think that US dollar tightening will continue to roll out through the emerging markets. We're seeing tension in the Hong Kong money markets. Some of that is because China is looking to access those dollars as well. And obviously by the end of this year, I think importantly, we're expecting the European Central Bank to have effectively slowed down to a trickle its own quantitative easing program, which will not only affect the European bond markets and the European equity markets because of the amount of money that the ECB has been printing, but clearly some of that money has been leaving Europe to head out into other markets. So generally the quantitative tightening on the one side plus less liquidity from the ECB all are going to make liquidity more of an issue as we move through. And I think for us as investors and for your clients listening, I think the other side of liquidity is we've generally in a rising tide seen a lot of buying. If we suddenly see asset markets become more choppy, we may have to go through periods where we see selling of ETFs and other type of structured products, which we haven't had to endure for the last 5 or 6 years. That, of course, could create momentum to the downside in some asset classes, even when we haven't seen the fundamentals shift to warrant that type of selling.
You know, just to come back to the point you made about 2013, I mean, do you think things are significantly different? Because obviously the setup now, while in 2013 you did have commentary that the Fed is going to start to thin out the quantitative easing, but it's still going to be there. Now the situation has reversed itself, where they're completely pulling out and sucking out the liquidity from the markets. You did not have the significant, pressures looming large with regards to the tariff war, which you have now. So the environment itself seems to be a little bit more different than 2013, which probably causes you to believe that the impact could be worse off than 2013. Do you think so too?
Well, I think in theory it should be. And so the learning that I'm looking at is we think the fundamentals are stronger than they were in 2013. However, leverage in some emerging markets is unfortunately higher than it was, which makes some markets like Argentina or Turkey more vulnerable to this theme. However, I think where it's different to 2013 is we would argue that the politics has worsened across many emerging markets. And therefore, I think the dynamics is that I think because of this persistent global hunt for income that we've been seeing, where many investors around the world have been ending up in emerging markets simply because of a hunt for income, possibly we are still enduring an over-positioning towards emerging market assets across the board, which we're now beginning to see that unwind. So I'd like to differentiate. We see this as a market investor sentiment thing rather than necessarily a fundamental problem. But obviously in Turkey, it has become a serious political concern. In South Africa and Argentina, it has become a serious economic concern, the confluence of the economy and the politics. So I think for India itself and for Indonesia and other parts of Asia, I think we must make sure that politicians are seen from the markets to be doing the right thing rather than the political thing, because I think that will undermine investor sentiment even more if we see politics being played with policy, as we have in Turkey.
Right. Neil, Dwane, thanks very much for joining us. Really appreciate you taking out the time and speaking with us and sharing your views on the show for us. A quick...
My pleasure. Thank you.
Yeah. A quick take there from Allianz, there, Neil Dwane. Let's take a look at the markets then. 1% cut, still holding steady for the index, 11,400. We opened at 11,500, gave up about 107 points right now. Sensex convincingly below 38,000. So 397 points given up. Nifty Bank down more than 1%. Just among some of the gainers, though, we have the oil marketing basket, which was up about 3% for BPCL. HPCL is up 2.2%, and IOC gains about 1.5%. Market breadth seems to be a bit thin, obviously in favor of the declines, but you do have a few bright spots as well. Amongst the losers on the index, and HDFC, spills out about 2.4%. Bajaj Finance, Bajaj Finserv, both of them down. HDFC Bank, HUL losing about 1 to 1.5% apiece. So that's the market setup as of now.
Yeah, well, broader in the spectrum, 2 or 3 stocks which are trading at new highs for themselves include one, Vimta Labs, which is up about 4% or 3% at 333, but that's a new high. Oracle Financial Services at 6% higher. That's also trading at new highs for itself. So select names doing reasonably okay for themselves. One more name which is doing fairly well for itself is Sterlite Tech, about 1.5% higher. Remember, they've announced the expansion of the optical fiber capacity from 15 million kilometers to 33 million at a cost of about 320 crores, expected to be completed by June 2020. Let's talk about this in detail with the group CEO, Dr. Anand Agarwal. He joins us right now on the show. Anand, good having you. Thanks so much for taking the time out. Now, how am I to view this? Is this a reiteration of the confidence that you have expressed in the past, that till 2020 you have clear visibility on growth, and for post 2020, because of the demand that is anticipated in the markets that you cater to, you're expanding this capacity meaningfully to set the growth path for beyond 2020?
Sure, Neeraj. This is essentially an overall validation of our belief that data continues to grow, that capex in data-oriented networks will continue to grow. And our focus and our position globally has been increasing, and it is a focus on increasing our global market share to closer to 10% from our current 6 or 7%. So we took a few decisions in that order. We have taken a decision last year to expand our optical fiber capacity from 30 million to 50 million kilometers by spending about 1,200 crores. This capacity will come online by June 2019. Earlier this year, we announced one acquisition in Europe to establish a point of presence in Europe for sales, distribution, and proximity to our customers. And this is the third decision in the same rationale, with the same logic, is to increase our capacity both in India as well as in Europe towards taking it to 33 million kilometers. So we have the right scale, we have the right technology, and we have the right proximity to customers. So it's aligned to that overall holistic strategy that you were also speaking about.
I doubt you'll need to raise any kind of money for this. Internal accrual should do it for you?
Yeah, it will be largely internal accruals and maybe some short-term debt. We have planned it so that the peak spending of the optical fiber capacity is happening currently, and the cables will start only after this. So we would be able to structure it well that we don't need to raise any equity finance.
You said you would be requiring to raise some amount of short-term debts. Does that significantly affect debt on the books? Because you have been undertaking some debt restructuring plans. You mentioned it 3 years down the line, you will be taking on board some restructuring. So does that change anything significantly? It's a very marginal amount.
No, it's a very marginal amount, and we have been pretty prudent about keeping the balance sheet healthy, debt equity ratios healthy, return on capital deployed healthy. So all the decisions that we are taking are being taken under that purview. So we won't need any per se any significant debt on the balance sheet.
Anand, the last time that we spoke, you mentioned about 5G being some time away. I'm just kind of jumping guns out here, but this capacity that you are expanding, this optical fiber capacity, is this also done keeping in mind the demand boost that comes in from 5G? Because back then also you had mentioned that the 5G demand globally will start coming in only post mid 2020, and this is kind of coinciding with that timeline. or am I reading too much?
No, absolutely, Neeraj, you're bang on. So clearly we see that the current phase of CapEx which is happening is towards creating a strong backhaul as well as access network for, one is 4G and the second is fiber to the home. So we believe as this starts phasing out, the 5G is moving into trials in the current year, and the commercial CapEx deployment will start happening largely globally from 2020 onwards. And we are clearly preparing for that. If you see our order book, it has significantly increased. It is a multi-year order book. And clearly the focus is that as the current CapEx starts tapering and 5G starts going up, we continue to be very, very relevant with a high market share with all our key accounts and customers globally.
So, since you mentioned your order book, your Q1 FY19 order book stands at about 6,033 odd crores. What do we see that expanding to by the end of this calendar year? And, are you adequately placed in terms of, fulfilling these orders?
Yeah, so if you see our order book around this time last year, we were close to about 3,000 crores. So now we have almost doubled the order book in the last 1 year or so. And these are multi-year order books. So our focus is on creating more long-term visibility, better predictability, and the capacity scaling that we are doing through optical fiber, through the Europe acquisition, as well as cables, is towards catering to this better order book as well as better predictability. So yeah, the short answer is we are well equipped to meet the order book requirements.
You'd mentioned also that your 2-year capex plan is closer to about 1,000 odd crores. How are you staggering that, and do we see a significant chunk of it also coming in the second half of FY19?
So we took the decision of 1,200 crores of investment in optical fiber in FY18, and that the spend is happening in 18, 19, and 20. We've taken a new decision for cables, which is a 300 crore decision, and the bulk of that spend will happen in 20 and 21. So we have staggered and phased out this entire 1,500 crore investment over 4 financial years. In FY19, we will see a stronger capex investment for the optical fiber capex, and it will start tapering off next year. And at that point, the smaller capex of optical fiber cables will start on. So as I said earlier, we are pretty cognizant of what cash we will generate from operations and how much we need to do capex as far as our balance sheet is concerned.
Anand, just one last question from my end, and essentially that's on the capex that you've announced. How does this work? I mean, does this entire chunk come on stream at the same time and then the capacity utilization builds up, or does this happen in pieces? Because I would presume on the optical fiber front, this is the largest capex that you would have announced. How does this come on stream?
So Neeraj, it will come in phases. So on optical fibers, 30 to 40 will come on stream by later of January 2019, and 40 to 50 will happen by June of 2019. And similarly, here in optical fiber cables, going from 18 to 33, we will do it in two phases. In the next 18 months, it will broadly be half within the first 9 months and the other half in the following 9 months. So we have structured it so that we get the right amount of spend, we get the right amount of capacity utilization, and we are able to meet our commitments as well.
Would this be it, or would you need to do more, looking at the demand that 5G will generate? Can you envisage that right now?
For the time being, I think we have our hands full with commitments, with this capex that we need to do. But as you know, for the last several years, we've grown multifold. And as we see better visibility, we'll take appropriate calls.
We've seen a margin trend only expanding for you, over the last few quarters, and with an increasing order book for yourself. You know, like you said, you've doubled on a year-on-year basis. Has all of that been taken at the higher end of the margin, closer to what you're currently clocking for about 27-28%?
The margins is more a reflection of, see, we're a sum of 4 businesses. So we have a fiber business, we have cables, services, and software. So the best margins come from the bare fiber business, which is a high technology, high intellectual property business. But the order book is a mix of all the businesses. So I would say we look at absolute EBITDA growth that we deliver, and we look at the return on capital deployed. So those are the metrics which we keep a more stronger eye on. The resultant combined margin is something which is a reflection of the revenues for the particular quarter.
Okay, Anand, we'll leave it at that. Thank you so much for taking the time out, and all the best with the CapEx. We'll of course look forward to talk to you and your team post your quarterly numbers as well. That's Anand Agarwal of Sterlite Tech on a large capacity expansion plan that they have announced. Okay, the market's looking soft. Good time to get in our experts on board to try and figure out how to approach markets in the near term. Hemen Kapadia of KRChoksey with us in the studios now. In a bit, we'll get in Sumeet Bagadia as well. But Hemen, good afternoon. Thanks for joining in. How are you approaching trade today?
Very good afternoon, Neeraj. Thanks for having me. I think we remain in that range. Neeraj, we have been for some time. As of now, 11.8 is far away, but 11.8 seems sacrosanct. The UI interest from the beginning of the month seems to suggest that it looks to be unsurmountable, this series. I think 11.600 is the next point, but frankly speaking, we seem to be swinging in a yo-yo. I would be unduly worried only if we crack 11.2 and slip downwards. I don't think that looks like happening in a hurry. So we're going to remain in this range between 11,200 and 11,600. Only if we sustain about 11.6, Neeraj, I think we'd see a pleasant, unexpected surprise on the upside. Having said that, the bank nifty keeps on getting hammered at the drop of a hat. I think we are trying to see some stability as far as the bank nifty is concerned. 26,643 spot is important. Maybe we overcome 27,135, things should improve. So I think it's a very script specific market. It goes nowhere. I don't think it's going anywhere.
I remember last time you came, the bank nifty had fallen with 27% change in open interest, and you had said that it looks like we could see a bounce on the banks, but doesn't look like that bounce has happened yet.
No, Devina, you're right. The bounce didn't sustain, but Friday we saw the bank nifty shed 3 lakhs again. I frankly speaking, I'm not sure. Normally if you look at the last 3 settlements, Devina, we've been around 24, 25, maybe even higher, as high as 27, 28, 29 lakhs. We're below 15. So to be honest, I'm not sure. Is there lack of interest or I don't know. It's too light for it to fall further. That's the way I look at it. Like you're saying, the upside wasn't very significant, but I think it's too light to tank significantly from Devina.
But actually, the day we spoke, the RSI was closer to about 33 towards the bottom, being oversold. Now it's closer to about 36. So there was a slight bit of, and like you said, the rally didn't sustain, but there was a slight bit of a pullback that came in. And on previous occasions, we've actually never seen the bank nifty cross below the oversold reading on the RSI. So there could be an anticipation of it either flattening out from here or probably seeing a slightly more of an upward bias on the index. But what are the stocks that we should look at now, Hemen?
Okay, I have a couple of stocks. I like Adani Ports, Devina. Hasn't done much, and now it's looking a bit interesting. One gets the feeling that we've been sideways over here, but things are improving now. We've seen the weekly MACD give a buy. The stochastic has given a positive failure swing. The daily mechanical indicator like the MACD is on the verge of giving a buy. So buy on Adani Port around 380, stop loss 372, target 396. The second stock which I like is Castrol. We've seen Castrol stagnate a bit. It gave an upward key reversal in the last week, Devina, and it has held on. It's not a very active or a very large mover, frankly speaking. It's not a very active FNO stock, but deeply oversold, positive divergences, indicators buy on the weekly chart. So buy in Castrol around 156, stop loss 152, target 164, Devina.
And I believe you have a spread strategy on the index also.
Yeah, I think it's been slightly monotonous, Devina, but frankly speaking, I don't think we have a directional bias. There is a negative bias, no doubt, but not a clear directional bias. So a sell, Devina, on the 11.8 call and 11.2 put. I know it's a large range, and why 11.8? Because I still feel this week we're going to make a attempt at 11,600. So that's why, and I think the downside is capped at 11.2. Yeah, and if 11.2 breaks, I think there'll be pandemonium. We'll drop 150 points in a jiffy. But as of now, I think that's not on the horizon, at least the way I look at it.
Very strong words there in terms of the kind of downside that we have.
Well, let's wait and watch if everybody else agrees to that or no. Before we get in our next guest in fact, our fundamental guest in, just a quick thought from Sumeet Bagadia of Choice Broking with us on the show as well. Sumeet, good having you. Thanks for joining in. What's the index strategy for the day?
Hi, good afternoon. Well, I think immediately the way markets have given a gap down opening today, it seems that some more downside can be seen. So there is a possibility that from downside we can see levels of around 11,350, 11,300 as a immediate target on Nifty, and on higher side it has resistance at around 11,450, 470 levels. So till the time these levels are not taken away, it's better to be on sell side in Nifty. Once the resistance is taken away, we should be on buy side, because once the resistance is taken away, we will see move till 11,550, 11,600 levels. So one should trade with strict stop loss. On the Bank Nifty, there is a possibility that we might see fall till 26,600, 26,500 levels. So for a trading perspective, one should initiate sell positions with a strict stop loss to be placed at 27,000 levels. Because if 27,000 is taken away, then we will see move till 27,300 or 27,500 levels. So 27,000 should be the stop loss for short positions for the downside target of 26,600 and 26,500 levels.
All right.
And what about specific, sorry, you want to mark Monsanto?
Yeah, I did, because the stock's suddenly seen a big sharp uptick on the counter. It's up almost 350 points at last count, 11 and almost 12% higher, 3,180. The stock in the morning opened somewhere closer to 2,800, 2,850, and just in the last few minutes of trade, volumes have picked up and the stock has actually seen a big surge. Wonder what's been happening there, but we'll keep an eye out on it.
Yeah, we should. Sumeet, firstly, your stock recommendations for the afternoon.
Well, the first stock for the day is BPCL. BPCL, after a long time, it seems that from here on we can see a good upside move. It's quoting at around 360 to 363 levels. Downside, the stop loss for long position should be 350, and on high side from here on there is a possibility that we might see upside move till 375 or 380 levels in next couple of days. So one should initiate long positions in BPCL with a strict stop loss to be placed at 350 levels on lower side. The second stock for the day is from metal space, and that is Tata Steel. Tata Steel is looking good on charts. There is a possibility that from here on we can see a move till 640 levels. I think one can initiate long positions between 650 and 620 levels with the stop loss to be placed at 605 on lower side for the upside target of 640. If 640 is taken away, then we will see extended move till 660 or 670 levels.
All right. Hemen, you tracking Monsanto?
Well, I wasn't, but Devina, you spoke and I started tracking. But seriously speaking, like you said, big volume spike up. But frankly speaking, the big volume spike ups happened on 30th and 31st August, Devina. I think the volumes were highest in the last almost a year or more. Today, volume spike hasn't been that drastic, but yeah, the stock has virtually gone through the roof. Having said that, we've been up since it posted a low of 1500 in 2016, Devina. Higher tops and higher bottoms. It's been ambling along, nothing spectacular. I think it seems like a one-off case. We are in a gradual uptrend that hasn't changed, but I'm not sure how to sort of put this technically.
Actually, it's not even giving you an opportunity to take a trade here, because it's just, the prices are changing every second. 3,300 now. Last we checked, it was up 350. Now it's up 470 points, so 16% higher on Monsanto. It's a tick by tick move on this counter, and the volumes from 16,000 just a few minutes back when we took the first check is now up to about 28,000.
Something's brewing. We'll get to know about it when we get to know about it. But that's the call on Monsanto. The stock is very active. Let's get in our fundamental voice on the show. Santosh Singh of Haitong Securities with us on the show. Santosh, good having you. Thanks so much for taking the time out and speaking to us today. Something's unnerving the financials. Would it be the belief that yields and then rates are on the high and therefore cost of funds would go up? Because today, without exception, we're seeing NBFCs and banks correcting in trade.
Yeah, so the way 10-year bond yield is going up, it doesn't seem normal. So that's a real concern. The cost of funding in the market going off is a real concern, definitely. And the other part has always been that financial is the most active amongst the entire index, or you can say the entire market is the most active area. So whenever there is a sell-off, financials are the first ones to sort of, or a buy-in. Financials are amongst the first ones to get impacted. But yes, definitely bond yields going up as is not helping any way the sentiments or the fundamentals of the companies.
So would you reckon that there's more downside into these names right now? Because what happens to the yields is anybody's guess, but almost everybody seems to believe that we will see some action from the RBI, this policy itself. Would you be negative on banks and NBFCs therefore?
See, when RBI action, the market is already pricing in whatever we are looking at on the bond side. It's already pricing in what sort of action we can see from RBI. So even a 25 basis point increase, I don't think anyone is going to get negative because of that reason. So the real problem here is that on a macro front, if we see this sort of volatility, which we are seeing as of now, the bank stocks are not going to do that well. So that's one part of the problem. Being a high beta sector, the stocks are not going to do well if on a macro side we keep seeing this sort of volatility. Having said that, means on the banking side itself, we are seeing a lot of positives. So be it even on the new sort of NCLT cases, or be it the guidelines around some of the power assets, we are seeing some incremental positives also coming in. So that's one saving grace. But yeah, means unless and until we see some stability on the macro front, I don't think so banks are going to do that well.
What are you positive on right now? I mean, the markets are looking a bit jittery due to external factors and obviously what's been happening on the macro front. But, each company's earnings story drives its own performance. So is there anything in particular that you're watching out for in terms of specific stocks or a sector that you particularly like?
So we have been positive on corporate related banking stocks for some time now, and we have been highlighting that these are the companies where if you've got very good or very high quality liability franchise, you should be looking out for that part of the market. So we are quite positive on ICICI Bank. And one of the new ideas which we have come up with, actually we have started getting positive on something like a GIC Re. Actually, this is I don't think a lot of people even look at that stock, and the company has fallen almost 30%, or I think more than that, post its listing, and it looks interesting. And if you look at the way the company is structured, actually it's not going to have rupee is going to be actually positive for it, because a lot of its assets are outside India. So rupee downward movement is actually positive for that company, and at the same time valuations are quite positive and favorable to that company, and it's almost like a monopoly in India. So that's another company which we like. And then there is something like Motherson Sumi, which we have been liking given the sort of fall we have seen in that stock, and our expectation that more than 20% EPS CAGR for next 3-4 years is almost a given.
Well, a stock that has fallen, on which I believe Santosh would have views, is HDFC Life. Now, this change of management or otherwise, but HDFC Life from a high of 535, 540 is currently at 413. So this is the most premium life insurance player, correcting almost 25%, or actually more than that, from the recent peak, and maybe part due to this change of management as well. But Santosh, is that it, or is there more to this? And therefore, after this correction, with valuations looking a lot more reasonable than what they looked maybe 4 months ago, does HDFC Life provide an entry opportunity?
I would think so. So first thing is on definitely one part which has been concerning the market is the change in the management, because see, Amitabh has been one of the much more visible CEOs in the market, and he has done really well, and that is visible on the Axis stock, where the stock has just flown through the roof after the announcement or even a speculation that Amitabh is going to join Axis Bank. So that stock re-rated quite significantly. So that's one concern which is there in the market. And the other part is that HDFC Bank, which is one of the biggest distributor of HDFC Life, now their branch network is open for Tata and Birla, which also are tied up with HDFC Bank. That means the individual business growth is slower. So these are the two key concerns which are sort of playing on the stock. But our belief is, one is on the management change. Yes, means Amitabh was a great CEO, but yes, we find HDFC current team also to be equally good, and ultimately it's a HDFC brand as well. So on that we are not much concerned. And HDFC Bank, in our view, I think the way they have changed their business mix, that is HDFC Life has changed their business mix a lot towards retirals and all. I would believe that new business profit growth of more than 25% will keep on happening for next 3 to 4 years. So yeah, means I think it's more of an entry point than anything.
All right, that's on HDFC Life, but nonetheless, even an HDFC AMC in terms of valuations has seen a correction post-listing. Stock was at 1800 plus, now has picked up, obviously, had dipped below 1600, but now once again reaching those levels, down 2% in intraday trade today. The other pocket, which on the contrary has seen a move on the upside in falling market, is the oil marketing basket, and a BPCL, which actually made a year's low of 334 just 4 days back, has seen a pickup from there and now trading about 366. These stocks particularly don't do much unless there is some news that drives it. Hemen, in terms of a technical position on these counters, take for example a BPCL, is there a contra trade here, or does it have more room on the upside?
Yes, Davina, like you said, they frankly speaking don't do much, but this time you look at the entire basket that you mentioned with its IOC, HPCL and BPCL, all are they obviously do move in tandem. But yes, I think they look good enough. But like you said, 325 to 367 in 3 trading sessions, that's huge. So one, it looks like a trade, but not without a cool off. I wouldn't be that comfortable buying something which has moved $40 in 3 days, especially something like a BPCL. It's 365. Sub 360 is what it looks like, but this time there seems to be something of a weekly revival also, Devina. So whether it's IOC, BPCL and HPCL, I think they all look promising. I know they do fizzle out very easily, but yeah, this time it just looks a shade better.
All right. Santosh, just one last question before we let you go. There was a CLSA report which spoke on Indian pharma, saying that improving fundamentals and the tailwinds from the currency will lead performance. You've got still certain levers left to the rally in pharma stocks. Though FIIs are still a little bit underweight on pharma at this point. What's your take here?
See, pharma is one area which has performed really, really badly, I think, over the last 1.5 years. And and there are concerns which still remain. If you would have looked at Sun Pharma, what happened the concern still remains from the US regulatory front. But I think what provides comfort so my analyst is also quite bullish in the space now, and what provides comfort is that the valuations have come down quite significantly. So around 1.5 years back, these companies almost started trading at consumer valuations. Now they have come off quite significantly, so that's a comfort level. And we believe that yes, Indian pharma has a lot of potential, but at the same time US regulatory issues have been a problem for this space. Now with valuation cooling down, and these are mainly exporters, so even the rupee depreciating is good for them. So means we would not be buyers of entire pharma space, but on a case by case basis where we are not seeing a lot of action from the US FDA, those are the areas which we would like to buy in this particular space.
Okay, Santosh, we'll leave it at that. Thank you so much for taking the time out and being with us today and giving us your thoughts. Appreciate your time.
Thank you.
That's the view from Santosh Singh of Haitong. Now, a pocket that is extremely active the last 2 or 3 sessions is sugar. and the question mark in everybody's minds is, do the recent moves bring about a fundamental change in the way the business in the sector can happen over the course of the next few years? Let's get in an expert voice to talk about this very issue. Jaykumar Toshniwal of Toshniwal Equity Services. If you follow him on Twitter, you will see that he's released a bunch of news points or tweets on his beliefs on the sugar space. Mr. Toshniwal, good having you. Thanks so much for joining in.
Good afternoon.
Now, there has been a bit of an upsurge into these companies ever since these announcements came about. Is there a trading bounce in beaten down names, or do you believe this change of a higher ethanol price fundamentally changes the metrics in which these businesses operate?
It's a mixture of both. Most of the share prices for sugar stocks have gone down by more than 50% in the last year or so, and they've been sort of stagnating at lower levels. So they required a trigger to go up. And this industry being a highly politicized industry, where almost everything is controlled or sort of interfered with by the government, any policy announcement to support the industry will straight away give a push to the stocks. So the movement which you see now is definitely for the better, but I'm not sure to what extent it will sustain, because the balance sheets and financials of most of the sugar companies are in bad shape, and the policy announcement of raising the ethanol price to way above the cost of petrol for the oil marketing companies is not a viable decision.
So would you, I mean, that's actually something that somebody expressed, that there are haphazard changes that are being made, firstly in the price of sugarcane and now in the price of ethanol as well, because there won't be any takers for such a high priced ethanol. However, the managements have not said that. You believe ethanol at 59 a litre will not find takers?
See, the basic takers will be the oil marketing companies, who are again controlled by government. So they don't have independent voice, really speaking. So they will have to follow a government directive. Though to some extent they've been resisting, in spite of a 5% blending fiat by the government, what they've really achieved is about 1.5 to 2.5% in the last 3 years. So there is resistance at the oil marketing companies, but they will have to follow the government directive to some extent. But it's not an economically viable proposition. Ideally, the ethanol price should be at a price, max would be a price of the petrol cost to the OMCs.
Which would be what price?
Say around 30 rupees to a litre.
Just one point here, that while the initial euphoria around these stocks is immense, as we can see it over the last 3 days, does one need to also be concerned with regards to just an announcement that the government has made and how the implementation of that will actually follow through? Because in the past, everyone cheered when the MSP price hikes were taken, but now everyone's talking about how the implementation will actually happen, and will that have a significant bearing? So is that something that we need to watch out for before everyone just gets so excited and rushes to buy these stocks?
Definitely it has a very important bearing on these things, because on one end you want to pay a higher price to the farmers to make that section happy. At the other end, you want to reduce the price of petrol, and buying ethanol at 59 rupees really doesn't make sense. So implementation will be a big challenge.
Okay. What happens in the eventuality that ethanol does find takers, and say 10 to 15% of the overall cane produce is diverted by these millers towards production of ethanol and not sugar? So then we are working in a scenario wherein ethanol fetches higher pricing and there is less sugar manufactured, which might give a floor to sugar prices. That's an argument of the bull in sugar. Is that a reasonable argument?
Definitely, when you try to discover the price of sugar, you have to focus on the supply side, not on the demand side.
Precisely.
A 5 million ton movement out of sugar production will definitely help the sugar prices to improve in the local markets. At the
Do you think that will happen? 5 million tons out of sugar?
Yeah, we have a carryover stock of about 10 to 12 million tons right now. So a 5 million ton reduction will be quite
But do you think a 5 million ton reduction would happen as a result of this move?
Government is trying to do that. This move also includes another move which is being discussed in government to create a buffer stock of about 3 million tons.
Okay.
And some movement of sugar towards ethanol. So all in all, you can expect 5 to 6 million tons of diversion from sugar to ethanol or buffer stock. So that will improve the sugar prices, give a sort of a flow to the sugar prices. And a 59 rupee price, if it works out for ethanol, will definitely generate almost about 7 to 8,000 crore rupees extra revenues for the sugar industry. So that would straight away go to the bottom line.
But, Neeraj, when we spoke to the management, I think, of Dwane, they said that sugar right now has such a backlog and such a glut in terms of their production that even if people start to divert and go towards ethanol, prices of sugar may not come down that substantially because there's overall so much of backlog and there is oversupply in the market right now. So whether or not this actually helps.
Yeah, but this may have a long-term impact. It may not necessarily have an impact, I would presume, in the near term or in the current first 3 months. But if indeed, I mean, starting this new season, if companies start diverting, and with the presumption that ethanol prices are higher from the current crushing season itself, and companies start diverting, then you probably see some sentimental reaction in prices. I think we've already seen some uptick in sugar prices.
Yeah,
post
and
this
prices are primarily sentiment-driven.
Yeah.
So if market feels that sugar supply is going to be a little tight, then prices tend to move up immediately.
Yeah. So what, okay, so you started off this answer, I think, in a response to Devina's question about the PLN and the balance sheet of these companies as well, not in the pink of health. Now, that's a known fact. Does that improve over the course of the next 12 months if these measures work?
I think these measures will support additional recapitalization of the companies, probably debt restructuring or raising equity, strengthening the financials. Both have to go together. And lenders would not like to give more monies unless they are sure of the funds. So these policies will support the action to be taken by lenders or equity holders.
So there are some very stressed companies, there are some stressed companies, and maybe there are 1 or 2 companies which are not under the stress scenario. Would you go out and buy across any of these 3 buckets in the sugar space?
On a shorter term basis, since we have seen a sharp run up, I don't think a decision would be justified at this stage. But definitely they qualify for a buy on every declines. Because when we are seeing a macro fundamental change of the government, I think the industry may see some better times in a few years.
What do you buy? The very stressed ones?
No, the stronger ones.
The delta would be...
No, delta would be high, but there is still a risk on capital restructuring. So investment would normally go into the safer companies.
When we spoke to the management of Sri Renuka, I mean, they are one of the bigger producers. So in terms of which of these millers, which of these sugar companies, according to you, are well placed to capitalize on this kind of a move and benefit maximum in terms of transferring their capabilities towards ethanol rather than sugar?
That way, Renuka Sugars and Bajaj Hindustan are very well poised. But again, their balance sheets are in a very bad shape. So it's a very difficult call to take.
But now Sri Lanka has become a subsidiary of Wilmar, so do you think that will help them in a way?
It will take time. It's too early to say.
Yeah, well, that's a pertinent question. I think everybody, Devina is right, Mr. Oswal, everybody will want to know which of the companies, because Balrampur, the safest, arguably the name. But, so, okay, you're not buying the stressed out names. Would you look at an EID or a Balrampur or such names, or would you look at the UP-based millers, the likes of Dhampur, etc.?
I think, as you said, Balrampur looks a little better, but as I said, having seen a sharp run-up right away, it doesn't make sense to jump into it.
Probably they've already factored.
So you look at them to buy as time progresses, and whenever they correct, markets will keep showing corrections.
Yeah. Okay. We've actually seen a price move without even seeing any first sign indications of what they're going to do with ethanol. It's just the sentiment that's driven the excitement in the market. They've not even said what they're going to do. They've not even said how much they're going to convert. Nobody has given any indication of that sort.
Yeah, and already, if you see ethanol production, the alcohol production is almost they're utilizing 73% of the capacity. So many people may have to add some equipments to realize that capacity, which will take some time.
On the balance sheet again, they'll have to sit and invest for capacity expansion.
So results would flow if they flow a couple of months later, maybe 2-3 quarters later, to be the fastest.
Yeah, but well, when have you gotten a good announcement at a good price? So that's the other thing. One last question from mine, at least. Since we spoke about having to set up additional capacities, there's a company called BCL which has announced that they have given an order of 108 crores to Praj. I presume some of the other companies, if this move turns out to be fruitful, will have to also expand capacities. How does Praj therefore stack up in all of this? Because that stock too has made a move on the belief that orders will come into them.
The belief is right, definitely orders would flow in, and Praj is the best placed along. There are other companies also in the same business, but Praj is best placed in this line. So definitely they will see uptick in the orders, and the stock is reflecting that.
Okay, so would Praj be on your radar?
Yeah, it is already on the radar.
Okay, but would you be comfortable buying it is my question. Around in 16,
again,
17.
we have to look at the price movements in the market. So it qualifies for a buy, but then gradually.
Okay, great. Mr. Toshniwal, so good having you. Thank you so much for taking the time out and being with us today. And like you said, low down on the sugar names. Well, these stocks are extremely active, and therefore, with reason, a slightly detailed chat on sugar. Before we take that break, Sumeet, Bagadia, any of the sugar names, the charts of which look attractive?
See, some of the sugar stocks have given a good move in last couple of days. There is a possibility that some upside move can continue. I think EID Perry looks good to me. The stock can give a good upside move from present levels. It has broken the swing highs, which was somewhere at around 235 levels, 235, 236 levels. If we see closing about 235, 236, then probably we might see a move till we might see a move till 250 or 260 levels in next couple of days. I think those who have taken long positions in EID Perry, they can hold on the existing long positions with the strict stop loss to be placed at 225 levels on lower side. At closing about 236, 237 levels will take stock prices to 250 and 260 levels.
Okay.
All right. Just stay on with us, gentlemen. We're going to be taking a short break right here on the other side. We get you closer towards market closing and Fab 4 stocks just coming up on the other side.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, रेज. अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या? चूज वही जिस पर हो पूरा भरोसा.
वीरू, go for convenience. My company is online, quick and simple.
बेटा, but policy समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है.
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC trending with times. 62 सालों से हर जनरेशन की पसंद.
Dreamers. They're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are no different. They are you. When you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs. There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Agons of business never stop.
Agons of business never stop. Only on Bloomberg Quint.
September 15th, 2008. The day a titan of the investment banking world fell. An event so unlikely that when it happened, it shook the world economy. 10 years later, the world has picked up the pieces. Or has it? Bloomberg Quint looks back at the collapse of Lehman, its aftermath on India, and the recovery that followed. Lehman, a decade later.
Hi, this is Safir Anand. I'm an investor and I look forward to interacting and speaking at the Investor Carnival 2018 in Goa exclusively for Bloomberg Quint.
All right, 24 minutes left to go for market closing. No signs of respite there for the indices. We breached 11,400 on the downside for the Nifty, which is trading at 11,385 now. For the Sensex, 37,623, 1.2% given up. The currency looking weak in intraday trade, 72.38 is where it's currently trading at. That's the currency for you, giving up about 0.7%. A quick look at what's been happening in terms of the breadth of the market. The start of the trading session itself was weak. It started tapering off right now. So you have about closer to 877 declines versus about 697 in terms of advances. So you are seeing a slight bit of contraction towards the end of trade here. But let's go across and find out what are those 4 fab stocks on Yash Kapadia's list. He's here with that. Yash, good afternoon.
Good afternoon, Devina. So REC came out with an inline set of numbers. That one's up in trade today. Their net profits saw a huge improvement of about 36.5% on a year-on-year basis, coming in at about 1,500 crore rupees, while their net interest income that declined by about 10.5%. But all in all, an inline set of numbers, and the stock is up about 2%. KEC International has surged as much as 4% today. Macquarie, in its report, sees an upside of almost 51% in the stock. They maintain an outperform rating and have set a target price of 443 rupees. Now, they believe that the company would benefit from the government's move towards 100% electrification of the railways by FY22, wherein they enjoy a 40% market share. Some strength seen in the realty names, something like a DLF, that one's gained close to 2% today after there was a PTI report wherein the company said that it looks to make its housing business debt-free by March 2019, and also looks to use funds to the tune of 14,000 crores to fund new projects. The last stock I want to highlight is from the sugar pack. Our sugar, that is locked in an upper circuit of 20%. A whole host of sugar names which are locked in an upper circuit of 20%. Our sugar being one of them, has rallied more than 40% in just the last 3 days. Back to you.
Thanks a lot for that, Yash. So those are some stocks. On to the chart of the day. The Nifty Pharma Index has had a healthy 2018 so far, with returns of over 10%. 9 stocks in the 10 stock index have fetched positive returns this year. Let's now go across to the new look Nikki Mirchandani, who's here to tell us all about the solitary stock with negative returns. Nikki.
Thanks, Neeraj. Well, Nifty Pharma Index has been in pink of its health. If you look at the YTD returns that we've seen, it's almost a 10% return there, which is the highest probably we've seen for the index as a whole since 2015. Now, 9 out of 10 stocks out of this index have shown a positive returns, barring one, which is Cadila Healthcare. But if you look at the return potential, most of these stocks offer a negative return potential, and even the ones which are actually the cheapest of the lot, which is Cadila Healthcare and Aurobindo, which trade at a TTM/PE of around 19 to 20 times, they too have a flattish kind of return, a negative or a flattish return potential of around 3 to 4%, which makes us believe that the Nifty Pharma Index rally is kind of over for now.
All right, Nikki, thanks a lot for that. In fact, just pulling a few names out of Nikki's chart of the day. What do we do with these stocks? I mean, Lupin, Glenmark, Sun Pharma, Dr. Reddy's.
They're all buys, but they've all had brilliant run-ups, Devina. So from a longer term point of view, I think Lupin looks promising. But if you look at the Nifty Pharma Index, the daily MACD is, I think, signaled a sell, Devina. So we're at currently 10,005 If we don't take out 10,800, doesn't look like. So we walked into a small correction. We've had a superb move from 8,720 or something to around 10,800, Devina. So I think it's taking a breather. So from a trading point of view, I'd stay away from pharma for the time being. Investment, I think it's a buy on every fall, and I think for the next couple of years, pharma is going to remain positive. And we've ended a 3-year correction, Devina, as far as pharma is concerned.
Okay. Well, by the way, just keep in mind Monsanto has cooled off a little bit from those highs of the day, was up about 17-18%, is now up about 10%, so a bit of a pullback for that stock too. A good time to get in Yogesh Mehta of Motilal Oswal Securities with us on the show. Yogesh, good having you. Good afternoon. Thanks for joining in. By the way, just off the bat, Monsanto, did you guys hear anything? The stock has been very active in the last half an hour of trade today.
Yeah, Neeraj, good afternoon, but not sure about why the momentum has come into this Monsanto counter today. But the buyout and the offer from the parent company, that may have given some kind of a spurt for this counter, and probably many HNI customers are not willing to tender the shares to this open offer. So probably that may inch up something, the hope of expectation of the revised open offer price on the higher side, maybe.
Okay, well, let's wait and watch. The stock's cooled off a little bit from the highs, of course. Yogesh, a pocket which a lot of people actually firmly believe in investing in, and which has cooled off quite completely, is the HDFC family. HDFC, amongst the top losers today. HDFC Bank is up 2,000. HDFC Life is close to 400, and HDFC AMC is around 1,600. The entire bucket of stocks has come off quite rapidly. What would the house view be here? What have you been telling some of your large clients to do when it comes to some of these names?
Especially if we talk about especially for HDFC companies, then this group companies, probably we have seen a high of Nifty, and from that the difference between the high P and the low and the other band of the low P multiple, where the performance has not come. So probably the money has shifted some kind of a profit booking from this kind of a growth oriented companies, which now the growth has settled down to around 20%, and in some of the cases like HDFC Life and all would be 24% CAGR rate for next 2-3 years still. So that has prompted some kind of a selling of the profit booking rally, kind of a selling pressure into that. But otherwise, these are the companies with the long-term vision, at least next 2 to 5 years. Still, the visibility is there with the same consistency in delivering the growth of around 20%, 22% in HDFC Bank, similar in HDFC Limited, the parent company, and HDFC AMC, as well as the HDFC Life. So probably this is just a temporary phase scenario where we can see we have experience in many of the companies where from the higher level correction happens, but on the longer term scenario it's gonna perform from there.
Okay, well, watch out for some of these names in today's session. What else? I think among stocks which have corrected, Bata India is down about 4.5, Delta Corp is down 3.5, and Voltas, well, a stock that's actually fallen quite a bit in the last few days, down another 3% in the session today, 597 and counting. Any thoughts here, Yogesh? Bata India, or maybe a Voltas, maybe even a Delta Corp actually?
Especially I can comment something on Voltas right now, that the JV which has been now proposed JV, which will have a more venture into the refrigerator segment, the Beko. So all these will have some vicinity, and the targeted targeted revenue by 2025. It seems that right now it is very much priced in. So as we spoke right now with the valuation front, all this JV and the new sales and the growth oriented the outlook from the management commentary is all priced in at this point in time, because it will not break even below FY21 numbers. So for next 2 years the growth is curtailed. So we believe that upside is very much capped for Voltas right now. Even if it doesn't perform, it is fine, but the falling is not anticipated right now. But it may happen over a course of action since markets are such. So that Voltas is something. Secondly, as I mentioned on the growth oriented companies, where high PE multiple companies are getting a little bit of rationalization right now, in the PE moderation is happening. So probably Bata, which has delivered a growth rate of say mere 13 to 18% in last 4 to 5 years if we consider, and in last 2 years it has considerably gone up with the retail segment into the vicinity. So probably that may have given some kind of a profit booking into these names as well.
Two stocks that I want to look at that have been in focus over the last few trading sessions. One is the DEN Networks and one is the Hathway Cables. Today's session though, DEN Networks is off the highs of the day. On an intraday basis, it actually touched a 64. From there, it's come back down to about 60.5. Hathway Cables is seeing some bit of pull back. The stock's down about 2.5%. What would you do with these two stocks, Hemen?
Which stocks?
Hathway and DEN.
Okay, Hathway is, frankly speaking, I'm not sure it's a dead cat bounce, but it's had a stupendous recovery. It seems to be making heavy weather of this recovery. The levels to watch out were 26, 24. We broke down. Now we walked into those same earlier supports. Now resistance is Devina. So, well, if you look at it from a medium-term point of view, it's stabilized. Too early to say the worst is over. Currently, they're overbought, and I think the upside seems to be getting capped at around this 28, 29 level, as far as Hathway is concerned. And as far as Dwane Networks is concerned, a very similar scenario. Resistance at 65. They seem like they are in dead cat bounces. Even I'm not sure if the worst is over. They had fallen for multiple months. They stabilized, and now they're giving a recovery. Sustainability still seems suspect.
Sharp moves into Avanti feeds today. After a long time, I'm seeing the stock be on the top buzzers charts. Just very quickly, Sumeet, Bagadia on Avanti feeds up about 13.5% today.
Yes, you are absolutely right. After a long time, we have seen such move in the stock. There is a possibility that this move can continue, and from here on, we can see move till 500 or 500 plus levels in the next couple of days. Those who have taken positions, they can hold on the existing long positions. One can maintain trailing stop loss somewhere at around 435, 440 levels. And if there is a dip of around 10 to 15 points from present levels, then that should be used as a buying opportunity for the upside target of 500, 510 levels.
Okay, 3:15, that time of the show, when we get you what dealing rooms are recommending in this session today. Darshan Mehta is here with his channel checks. Darshan, good afternoon.
Good afternoon, Neeraj. Today, if you're looking at it, while most of the names are down, today some of the PSU companies are doing well for themselves, and one pack is the oil marketing company. BPCL is up 2%, HPCL is up another 2%, IOC is also up close to 1%. Dealers believe that majority of the selling is over the past few days. There was heavy selling, and they believe that potentially at this point of time, they believe that some of these stocks have bottomed out. That's what we're hearing. The other counter is again from the PSU pack is BHEL. There is a buzz of potential large order win that could be announced, and that's been spoken about. Counters down 1%. We tried to reach out to the management. We didn't get any clarity there. And finally, the last one is again, most of the sugar stocks are doing well. One of the counters which has done well but hasn't moved up significantly is Kapadia Cement. Cash-rich, debt-free company has significant amount of revenues coming in both from the sugar pack, also gets in money from the cement pack. So they believe that there could be more potential catch-up on Kapadia Cement.
All right, Darshan, thanks very much for that. So watch out for those stocks that we've picked up in our dealing room chat. Let's take a look at a few more stocks, and just to highlight some of the names there. We've got some pharma names actually, which have seen a slight bit of a dip coming in today. So you have an AstraZeneca Pharma, Zydus Wellness, down about 2.5% apiece on the counter. Names like a Chambal Fertilizers given up 1.5%. Then you've got a Radico Khaitan, which is down about 2%. Intellect Design, a stock which is down 1.33% odd. Just want to get in some trading ideas which probably can be traded for, buy today, sell tomorrow sort of an idea. Hemen, what would that be?
I think a BTST would be a Jubilant Food, and a STBT would be a RBL Bank.
What levels?
Jubilant Food is around 1360, so around 1358. 9 rupee stop loss, 18 rupee target. As far as RBL Bank is concerned, we are around 595.50. So sell it around 596, stop loss 600, target 588. 4 rupee stop loss, 8 rupee target.
After a long time, a sell call on RBL Bank. Typically, it's been on the buying list, but yeah, private banks and private financials are coming off. Maybe RBL Bank and app trade. Sumeet, what about you? Your top closing strategy?
I think Infratel is looking weak. There is a possibility that we might see a sell-off in the counter, in which we can see a fall till 250 levels. It's currently quoting at around 266, 267 levels. So one can initiate sell positions in Infratel with a stop loss to be placed at 272 levels on higher side for the downside target of 255 and 250 levels.
Okay, that's Bharti Infratel. They have the sell call there. Down 3% in intraday trade. Yogesh, any pockets that you're wary of? Probably you don't want to steer clear, don't want to enter them at these levels?
To look at, like OMC company like Darshan mentioned right now, those are trading at historical low levels. The crude prices are near to $78 and $80. They are hovering at these levels for almost more than a month now. Plus the rupee has already been at a historical low of 72.5 level if we consider. Then all the negatives are priced in. The only thing is that the risk factor would be, the only risk factor would be any subsidy sharing would happen to OMC companies, which has completely been denied on last weekend. So we believe that now worst could be behind. It is too early to say right now. But however, on the valuation front we are talking about, then these companies are like HPCL, BPCL, IOCs of the world. These three companies are available very attractive valuations if you are talking pure on the valuation front. Plus, if we talk about BPCL right now, then realization, the net sales has grown up by almost 20% in the last FY 17 to 18, and in FY 19 first quarter also it was up by 18-20%. The GRM margins are getting also very stable, and there is no subsidy sharing. It means 3.2-3.3% kind of a net profit margin. So on that front, on the EV to EBITDA basis, the stock is available at little less than around 6.5 times EV to EBITDA, plus the marketing margin of 7 times. So if we say that historical low valuation from earlier 9 to 10 times EV to EBITDA, and now it is available at 6 times EV to EBITDA, and probably if you think that this 25% growth rate will continue for next 2 years even, then there is much scope to more headroom to move from current levels, and we can see some appreciation. I'm not talking about this company because it has moved up today. This is just a coincidence. But otherwise, on the historical lower valuation, only PSU banks and the OMC companies are available. Pharma has already given a strong run up. So based on that, it seems that if markets are and the investors are waiting for a PE to moderate, then these are the companies which are available at this historical low valuation can be considered as a buy for investment perspective.
Okay, so those are some buys from Yogesh. But Yogesh, I was actually asking you what are you negative on?
Negative, if we say, then there is nothing like only IT companies are there where lower valuation on the dollar terms, the valuations on the dollar terms gain with their mark-to-mark margins, mark-to-mark bottom line will improve from there. That has already been factored in and now priced in with the valuation comfort. So we believe that upside for these IT companies is very much limited, and though it has become a fancy now, but on the valuation front, on the hedge basis, everything is priced in and can be looked at booking profits from the current level.
Interesting. Hemen, is there a trade in Nifty IT?
I'm bearish on Infosys because that's getting top heavy, even HCL Tech. As far as the Nifty IT is concerned, Neeraj, we are now.
Let me give you a technical term. We are overbought on the RSI. That's something that we saw this morning. But just wondering, is that a good enough indicator to initiate a short?
We are overbought on the stochastics and the MACD also. There's a crossover sell on the MACD on the weekly chart also. Sorry, on the daily chart. So I think it's slightly high risk simply because there is heaviness, no doubt, but we have to see follow-up price action. So if I were to anticipate a trade, Nifty IT spot is around 16,123. The recent high needed was around 16,229.85. So 16,230 would be my stop loss if I were to trade this. I don't think it's entirely a bad idea because see, I think there's a distribution process going on. It might not just give up gains in a day, but see, they've stagnated. If you see in the last 5 trading sessions, we've not made headway. So if it doesn't, I think it will fall under its own weight. But the thing is, will it to take a couple of days, trigger off the stop loss and then do it? It's academic. But yes, I think it warrants a trade, or one, I'm not sure how active they are. One can sell the slightly out of the money call option because I think that will be safer.
Okay, Nifty IT there. The index, as Neeraj highlighted, trading in the overbought region on the RSI, and a few other technical indicators also indicating that it is slightly overbought, rather, not oversold. But you do have these stocks still going from strength to strength on the back of what the currency is doing. So a lot of other external factors at play here, and not just the pure play technicals to watch out for the IT space at least. Anything else that's popping up on the screen right now, Hemen, that you would like to probably initiate a sell call on? Because it is ultimately, we are seeing a few days of weakness, and quite a lot of stocks within the broader markets are actually quite weak.
Actually, I think Reliance Industries is looking heavy. I mean, it's looking weak, but I think I'll go back to Infosys. I think Infosys has posted a new 5 trading session low, Devina. And we've seen a small distribution pattern, a very minor top, I'd say. So I think Infosys is where I would recommend a sell call, because the indicators are already showing something. It's broken the last week's low. So Infosys is the way to go forward.
Yogesh, what's your take on Reliance now? I mean, it's convincingly below that 1300 mark, coming in towards 1200. What's the sense here with regards to the valuation correction as well?
Yeah, since it has corrected almost more than 10% from the high price, now the valuation is a bit of comfort level now. So between 1150 or 1200 would be again a good entry point for the stock on the valuation front, because Jio is still is providing 256 rupees per share equity value, and the core business is also providing a good comfort level. Retail is not providing any kind of a valuation SOTP right now. So based on that, on marketing, pure marketing and the refining margin EBITDA level, it is still available very around 6.7, 6.8 times again on the refining margin front, EV to EBITDA. So we believe that around 1150 odd one can start, 1150 to 1200 one can start looking at again, re-entering into Reliance as an investment. But then again, global peer companies are quoting at around 9.5 to 10 times EV to EBITDA level. So their upside would be around 1400 to 1450 at max right now, considering Q1 results.
All right, that's Reliance Industries. Yogesh believes that about 1150 odd, it's a good entry point from a valuation perspective. The stock's currently trading at 1223, down about 2.5%. So that's probably one of the bigger draggers on the index in today's session, which it has been over the last few trading sessions as well. The other name again would be an ITC to keep an eye out for. But Neeraj is here with us. We've got a few minutes left to go for market closing. Neeraj, what are the moving parts?
Well, yeah, let me take you to the large caps, of course. Devina will take us through what's happening at the broader end of the spectrum as well. But about 1.25% odds, so trading in and around the lowest, closing in and around the lowest point of the day, which is never good news. Today's opening levels would possibly be the highest levels for at least the large caps. The mid caps and the small caps should come up on your screen. Different kettle of fish. In fact, the small caps ending in the green, which is not a bad sign. The mid caps, though, showing a brief bit of recovery at about 2 p.m., up about 1/3%. They've reduced quite a bit in the last 30-45 minutes of trade. So the close isn't the prettiest from a bull's perspective. But let me take you to the large caps, and then of course we'll talk about the mid caps and the small caps and the market breadth as well. The large caps, OMC is right up there, BPHP, IOC2 marginally in the green, Tech Mahindra and HCL Tech amongst the IT names which are doing well. Eicher Motors has had some gains, as has Power Grid, but the gains are few and far in between. What about the losers? Bharti Infra down another 3%, Sun Pharma down about 3%, Bajaj Finance brings up the financial names. So Finance, FinServ, Indiabulls Housing, HDFC amongst the names which have corrected, and Reliance Industries 2.5%. I would presume the principal drag on the index today. But the mid caps and the small caps to Devina, while they were looking reasonably okay at 2, just given up some bit of that good fever, so to say.
Right, Neeraj, I mean, looking at the overall sentiment of the market, it sort of weighs down on the broader markets as well. So the advanced decline ratio, when we'll come to that in a bit, though started to contract towards the end of the trading session, you did still have that tinge of weakness that kept them on their toes. Amongst gainers, today has been a flavor of sugar, and all of the sugar stocks in the broader markets have seen an upper circuit move, except for a Birla Porcini, which was in the F&O ban period, and that's why closer to about 10% higher. Dhampur is up 20%, Bajaj Hindustan is up 20%, so locked up an upper circuit right from the word go. You had Praj Industries doing okay for itself. Monsanto is the other one that you should watch out for. The stocks saw heavy moves in the second half of trade, crossed all the way above the 3,300 mark, 18% higher, but then after that it sort of petered off to close, now closing in at about 10%, so giving up those excess gains. Allianz FS Transport LNFS Engineering, two stocks, from the LNFS group portfolio, which seen the kind of moves that it has, 13% and 20%, and 17%, I'm sorry. There are talks of LIC coming in with a bailout package for them to get additional funding. So that could probably be a sentimental changer for these stocks. Inox Wind and MRPL are some of the other movers in trade today from the broader markets. Amongst the losers, we'll come to that, but that's the market closing for you. The Nifty as well as the Sensex closing 1.25% under for the Nifty, below 11,400. For the Sensex, it's below 37,600. This is a LTP. We'll wait for the weighted closing prices once they come out. But it was a weak day of trade, and it sort of exaggerated towards the end of trade. Amongst the stocks that lost out, and Ashoka Buildcon saw some cuts coming in, closer to the tune of about 5.5%. A Delta Corp from the pharma space, we had an AstraZeneca, which looked weak in trade today, alongside a stock like Zydus Wellness that dipped 2.7% lower on AstraZeneca. Godfrey Phillips and some banks that saw weakness in trade today included the likes of a J&K Bank and RBL Bank, and you had a UCO Bank as well, seeing dips of closer to about 2 to 2.5% apiece. But obviously, we'll have to wait and watch to see whether or not this sort of weakness carries on into trade tomorrow or not.
Yeah, I mean, so this is the picture, and just before we get into today's analysis, in order to see whether this carries on or not, just let's see how the world markets are doing. Europe was not an unhappy place about an hour ago. I wonder what the European markets are doing right now. Well, yes, a bit of weakness creeping in for sure. So maybe this was one reason why we saw some bit of selling in our markets too in the last 45 minutes of trade, because these markets were very flat at about 2. There's some bit of weakness percolating down here as well. So Europe certainly.
The setup itself is weak, Neeraj. When we started off, Asia, Hang Seng was down about 500 points. It recovered from there. So the pressure point sort of kind of weighed down on the sentiment here, and the kind of pop we got in the open on the dip we got on the downside, that sort of exaggerated towards the second half with the opening of the European market.
Yeah, I think that's well put, really. Bring up what the market breadth has been, and then of course the volume picture as well. So the market breadth, well, maybe narrowed down a little bit from the really adverse market breadth at the start of the trading day, but still about 2:3 in favor of the declines. Not an ordinary day, firmly in favor of the declines. And then the volumes should come up on your screen. Interested to see what volumes are today.
Well, that's a high number. So on the futures and options side, as we've been seeing, the last few days have been slightly more tempered. Today we're seeing about 7.93 lakh crores. On the NSE and the BSE cash, that seems to have toned down. So from an average of about 33,000 to 34,000, that's come down to about 29,000.
Yeah, and the contributors list, Reliance should be right up there on the losing side. Yes, right there. And all heavies yet again. The HDFC Twins feature there too.
Yeah, ITC, I mean, the last few days, when the markets have seen that kind of pressure, it's been ITC. In fact, on Friday's session, ITC was right at the top there. So we've got Reliance Industries now weighing down. Overall pressure points again. Remember, we've been talking about how shallow the index move has been on the upside. Probably the same stocks which contributed to the upside have seen that kind of a change in the overall sentiment, and some amount of profits being taken off the table for some of these names.
Yeah, hardly any gainers, 12 odd points, and thanks to IT. But this is just negligible, really. Anyways, final thoughts from our experts. And I believe Yogesh Mehta is also with us. Yogesh, firstly, final thoughts from you. And, what's the message to clients currently? Buy the markets at every dip, or wait for the volatility to ebb a bit before you go out and make some fresh purchases?
Neeraj, our perspective is a little different and separated from the industry maybe. That right now we are looking at volatility will be extreme in this since we are nearing to the elections corridor. So that will prompt more volatility. Plus, we are at the higher valuation. So we are advising to book profits wherever we can on the higher valuation multiple, and wait for the markets to correct or the price individual stocks to correct, and enter in with at the opportunity levels, and just watch out for those opportunities rather than getting into. So I mean, in short, it will be a sit on cash as much as you can, maybe 20-30% at this point in time.
Okay, so don't be in a rush to deploy money, is Yogesh's recommendation right now. Quick closing thought from our technical guest as well, Hemen.
Frankly speaking, didn't expect much, hasn't done much, Devina. I think even the rupee-dollar equation seems to be stagnating a bit. I think the dollar strength should at least cool down or stop a bit for the time being. So once again, script-specific market. IT looks heavy, Devina. I don't think there's too much of a downside, and I think like Neeraj mentioned, few stocks took it up, few stocks are taking it down. That still hasn't changed. So cautiously optimistic. Don't expect a big downside, but yeah, if 11.2 breaks, I think that could be a sharp fall. Otherwise, I think we're going to do nowhere. We have a truncated week. I think it's going to be a boring market.
Sumeet, what about you?
As I mentioned earlier, immediately there is a possibility of somewhat correction can be seen from present levels. I think on higher side, 11,450, 11,470 will act as a resistance. Till the time these levels are not taken away, it's better to be on sell side. And on downside, there is a possibility that we might see levels of around 11,300. If 11,300 is taken away, then there is a possibility that we might see extended fall till 11,200 also. Immediately, the range for Nifty is placed between 11,300 on lower side to 11,450 on higher side. Same is the case with Bank Nifty. We can see fall till 26,600, 26,500 levels. And on higher side, 27,000 will act as a resistance. So that should be the stop loss for short positions. If 27,000 is taken away, then we will change our bias from negative to positive.
Okay, gentlemen, all of you, thank you so much for taking the time out and being with us today. Really appreciate Sumeet, Hemen, as well as Yogesh. Really appreciate your time. And well, with that, it's a wrap on this leg of Countdown from Devina and me and the team that put this show together. Thank you so much for watching, but stay tuned to Bloomberg Quint Live, the market wrap with Agam Vakil coming up next.
Good news, got a promotion and a damn good raise.